Hey guys, Mike the Trade the Fifth Wave. I wanted to go over, while we got a little low on the action today, I wanted to do a reasonably quick video on Elliott Wave, the software that I use, and how you can do this without having uh, the software. Now, the software I have makes it very easy to, just quickly switch between stocks and look at it. And while it is easy, and I am planning on offering this for sale at some point, Uh, I want to show you how you can do it without, and kind of give you a quick synopsis of how Elliott Wave works. So here we have Ford, ticker symbol F, and this is the current chart, live chart. So you have all these A, B's, and C's in the software. This is a consolidation period. There's no discernible structure in there. But then we start to get a wave count. So a wave one high brings us a wave 1 high brings us a wave 2 low, then a wave 3 high, wave 4 low, and then eventually a wave 5 target. Now, these are calculated with Fibonacci retracement tools. Uh, the theory is that movements in stock price, no matter how big or how small, are always within certain levels. Not always, but they tend to follow the same pattern over and over and over and over. And this becomes the Elliott wave theory. So the first thing is what I call, you'll see me refer to as the stoplight. So what the stoplight is actually a Fibonacci, and I'm actually going to do this here on this live chart, and then I'm going to move to a chart where there is no chart, and just kind of draw some lines and show it to you again a lot cleaner so you understand. But we're going to do it right now on a live chart because, as we know, sadly, stocks do not go 1, 2, 3, 4, 5. Stocks do exactly what you see here. You have all these smaller, you know, up and down, pullbacks, 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 and there, you can actually apply uh, the Fibonacci retracement to each one of these pullbacks, and you can actually get to see them happen over and over and over and over and over. So if you went down to, say, the 5 minute, this is 30-minute time frame. If you went down to the 5 minute time frame, you would actually be able to see that that is an Elliott wave playing out, and this is an Elliott wave playing out, and that was an Elliott wave playing out, and that was an Elliott wave, and this is an Elliott wave, and this is an Elliott wave. So it happens over and over and over again in every time frame. But on the 30-minute chart, which is where I like to make my choices on swing trades, uh, between the 30-minute chart and the dailies. But so what the Fibonacci retracement is on Thinkorswim is this little, I don't know how to make it, I don't know how to circle it, it'll go away when I click off of it, is this little percent symbol here. This is the Fibonacci retracement. The other one we're going to talk about is the Fibonacci extensions. So the first one we're always going to look at is Fibonacci retracement. So after you have a large run, so we had our wave 1 up, we have our wave 2 pullback. So from here we had our wave 1 up and then a quick wave 2 pullback. And then we had this big run to a wave 3 high, right? So now we need to understand approximately how far it's going to pull back. The stoplight is different levels of the pullback, and when you apply the Fibonacci retracement to it, you will see, if we come to our our wave 2 low, which is approximately right there, and then run this up to the wave 3 high, which is about there, you can see these lines here where it just put these prices in. These are the typical pullback structures. So your pullbacks are going to be 38%, 50%, and then 61%. It's actually like 38.2 and 61.3 or whatever it is. Now, the software draws these zones. And in the zones, that is allows for what these zones will vary in size based on candle wicks. Uh, so if you have a wick, it averages in that wicking price. So the software does a great job of, you know, creating these zones as opposed to just a line. Uh, so where we expected 3, I like when I like when they hit stay in the green zone. It's still okay if they pull back into the yellow zone, and it's actually still okay if they pull back into red zone. Uh, Now this red zone, everything else has to be perfect, and they have to have some good news or something going with them for me to want to execute out of the red zone. I typically try to trade inside the green and yellow. Here we can see forward pullback right into the yellow area. And now we have to decide, okay, since it's did that, where's it going to go from there? Well, the software plots this. Now you'll always find I have my target zone adjusted down very conservatively. I like to know what that target is. So I like very well to have that target. More often than not, the next run will break my target zone. I do not have it set at my 20%. I have it set what Fib says, but I typically will take my profits at the 20% mark. But uh, so how we guess this without the software is now we're going to use another tool called the Fibonacci Extensions. So we're going to take the Fib extensions, and we have 3 points we have to click. So we're going to click that wave 2 low. We're going to go up and click this wave 3 high. And now we're going to go on back down to that wave 4 low. So what you have is with wave 5 is it's slowing momentum. So it is typically, while it, because we know what 1, 2, 3, and 4 was, this is a very predictable rate. It tends to get up to that 61.8% marker, where I usually take it down in the 50% range. So you'll see we get our wave 1 up, we get our wave 2 down, we have our wave 3 up, we get our wave 4 down, and typically this will run up and find that wave 5 to there. I have my target zone, like I said, adjusted down. So this plays out up and down. It does not matter if stock is in an uptrend or if stock is in a downtrend. This same wave plays out over and over and over again. So let's just go over to the 1 minute chart where I get rid of actually studies. Drawing style. Here, let's get rid of the extended hours, the highlighted extended hours for now. And let's just go up and get away from these charts for a moment. So we can draw some clean, I guess we can get up here, just a clean drawing board. All right, so we got a clean drawing board here. So what that looks like a whole lot cleaner is you'll get wave 1, whatever that is. Then we'll get a wave 2 pullback. Then we'll get a wave 3. Then we'll get a wave 4 pullback. Then we'll get our wave 5 run. So how that would typically play out is the first thing you're going to do is you're going to come down here to the Fibonacci retracements. Well, let's back up. Let's just back up here. Show you how to plot the whole expectation. So once we've had a we've had a discernible wave 1. So here's your wave 1 high. We've got a discernible wave 2. And now wave 3 is starting to draw. So if you want to see a probable target for wave uh, 3, the first thing you have to understand is right here becomes a line of resistance. You have to excuse me. I think I'm getting sick. I don't think it's corona, but whatever. So this turns into a nice wave of level of resistance. Okay, so once we've started back up, that is a very conservative entry point if you're going to try and play the third wave. I do not typically play the third wave unless I am in a never-ending, or I won't say never-ending, a long uptrend. If the stock that I'm looking at has been drawing Elliott wave after Elliott wave after Elliott wave up, sometimes I play this. If it is right off a reversal, this is not guaranteed by any means. So a decent entry point will be once our wave 2 breaks above that first area of resistance. Now that area will become an area of support. Okay. So if we want to know approximately how far this is going to run, we will go to our Fibonacci Extension tool. We will find the bottom of our wave 1, whatever we decide it is. We will find the top of wave 1, and we will come down here to wave 2. Now, typically, not always, wave 3 will be 161.8% of that retracement. So typically we can expect to see our wave 3 high to run to there. All right. So the next thing that's going to happen is, now that we've got our wave 3, this, if you entered down here, right? You entered down here after we break through. This is your place where you're going to take profits, because this will turn into the next area of support and resistance. So we'll draw that across. So that's going to be our next area. So we have, now that wave's got up there, it will typically, if it doesn't break the 100% mark, that is a warning indicator that this trend is going to fall apart. So it has to break, obviously, our area of resistance. This 61.8 is actually kind of irrelevant right now. This will be our wave 5 target when we draw that. I have that 100% line in there because if I don't get to 100%, it's time for me to get out of the trade. If it starts to fall off before here, boom, I'm out. But if we go up to that 161.8%, or somewhere realistically, between them, maybe a halfway point, if it goes up into there and then turns around, to me, this is still a good trade, so we'll go ahead and remove that drawing. Now, we need to see approximately how far it's going to pull back. So with that, we want to use the Fibonacci retracements. And all we're going to do is go from your wave 1 start to your wave 3 high. Now, this is our stoplight. Obviously, I created the zones in the stoplight tool, where this would be the top of your green, this is obviously your yellow, and this is obviously your red zones. So we want our pullback to go into the green. It's okay if it goes into yellow. It's probably okay if it goes into the red, but that is the highest probability of it falling apart. So for me, this zone is roughly a 90% chance. This zone turns into about an 85% chance. and this zone turns into about a 75% chance that it's going to, move up from there, right? So now we know we are going to most likely go ahead and pull back into this zone here. Well, so let's say we come down and we go ahead and we tag the 50% redraw line. So the next thing we want to see it break is we want to see it start to move up again. And once it breaks the last area of resistance, so if I actually have my stoplight tool, and that's what my stoplight tool is basically designed for, is entry points. So if we have, this would be our yellow zone here, so once it breaks out and into the green, that's confluence that we are now truly going in our uptrend, right? So if this is my green zone, I am going to actually wait for the stock to break out of that green zone before I'm willing to buy. So we pulled back, we bounced perfectly off our yellow line, and you'll be amazed at how often this truly happens. So the next thing we need to do is we need to figure out where it's going to run from there. So we remove this drawing just to make it clean. The next thing we're going to do is a Fibonacci extension again, only this time we're going to go from the wave 1 low, the wave 3 high, back down to your wave 4 low. This will set us a target range. On my software, you'll see that I actually bring my target range down into here. I like it to be more conservative. I like to hit it more often than not. But typically, because this run will be 61.8% of this run. So now we know that the stock should, as long as there's no bad press, bad news, whatever, go up in a run there. So once it lands there, now we have yet a new area of support and resistance. So what can happen from here is your stock is going to reconsolidate. It may go up, it may go down, but the full Elliott wave has completed, and it may trade sideways for a little bit, and it may go out and break past that area of resistance. So if it breaks out of that, we're going to continue that uptrend. If it gets rejected off of that line, but if it in turn comes up here and rejects, and starts back down, you know that the trend is about to reverse itself. One of the things I really look for here, I look for 3 patterns. Now, if you're a pattern player, and a lot of people are, there's nothing wrong with that. The patterns that you're going to see here that will signal our trend is obviously if we break out, that's a good sign. But what can happen from here is we get what everybody likes to call the head and shoulders, which a head and shoulders is a solid indicator of a downturn. So even if we break out and come back down and we break through that resistance, come back up and test and get rejected again, this is a very, very good sign of a trend reversal. If that's one of the signs of a trend reversal. The other sign that happens a lot, especially in a volatile stock that is making big swings, is instead of seeing that play out, you'll actually see just a double top. And it'll get rejected heavily off that line and move lower. And the big key is once it passes this level of support and that becomes resistance again, now it's a really good indicator of a downtrend. So Fibonacci and Elliott wave play out over and over and over in multiple time frames. Let's just go back down to our stock, and as you can see here, we have an upside down Elliott playing out, and this is on the 1 minute chart, but we'll just fib it so you can see how accurate this really is. So this is current on forward, and this is a 1 minute chart. So, but here's our wave 1 low. So there, I guess, is where it would be. So if we're going to do our Fibonacci retracement down, so there was C, that's the start, which is about right there. And now we're going to go ahead and pull it down to 3. You can see green, yellow, red. There's our targets. They're just upside down, right? So from there, what we would do is we need to, we want to see where wave 4 is going to pull back to, right? So there's our wave 4 pullback. Once we have our wave 4 pullback, we go to the Fibonacci extensions, wave 1, wave 1 start, wave 3 end, and there's our wave 4 target, and you can see our target, that 68.1% down, is showing that we're probably going to come down to about that 1404 mark, right inside that target range. So Elliott wave plays out over and over and over. It plays out in multiple time frames. It plays out in every time frame. It plays out in every way, shape, or form. So all you have to do to run the Elliott wave is set up your areas of support and resistance with your Fibonacci tools. And I'm going to show you how to do that right now. So let's go back up here where we can get into a clean area where we ain't seen any of that stuff. All right, so there's some more lines to get rid of. All right, let's just go back and delete all this. I'm not going to sit here and make you watch that. All right, now we got them done. The first thing we're going to do is our Fibonacci drawing tool. So this is the first tool you would use. So here are the areas that we like. You have your top line and your bottom line. So this is 0 and 100%. I'm using Thinkorswim platform, so I'll show you how to set this up in a minute. You have these 3 areas. So you're going to have, and every platform, any trading platform you're using will have the fib tools. So this one is 38%, this one is 50%, and this one is the 61.8 or whatever. And how you're going to edit those, you can draw one and just right click on it and go edit properties. And once you're editing the properties, we want the 0 line, which I make white. You want to click the 0.382, I make that green. 0.5, I make that yellow. 0.618, I make that red. And then 0.1, that's my 100% line, and I make that white again also. You're going to save that as default, click OK. The next tool that you're going to use would be the redraw tool, the extensions tool, I mean. So we'll just leave that on top. So you're going to draw that from the exact same point. You're going to draw that to the top of wave 3, and you're going to draw that down to wherever the wave 4 low was. Okay, so we've drawn that. Now we have the other half of our Elliott wave. So we have 61.8%, 100%, and 161.8. So with that, do the same thing. Right click on it, edit properties. You got your 0 line. We're going to have our 61.8, and we're going to have our 100% line. I make the 61.8 green, I make the 100 yellow, and I make the 1.618, 161.8%. I make that one red. I uncheck all the rest of them. I don't care about all the rest of those. So again, after you set that up, you hit Save as Default and OK. Now I have a complete Elliott wave chart, just like the chart that I've made before, uh, that will show me everything I want to see as far as how Elliott wave's going to play out. So let's look at this one more time. So we have start of an Elliott wave. We come up, there was wave 1. Got our wave 2 pullback. Okay. And in the perfect world, wave 2 pullback has started up into wave 3. So, like I said, if you want to know where wave 3 potentially is going to go, we're going to go Fibonacci Extensions. That'll be the first one you use if you're trying to plot 3. Pick that mark, pick that mark, pick that mark. Now, that 161.8 is our potential target for wave 3. Wave 3 draws out. Let's say it goes to there. Who cares? Doesn't matter how far close it goes. And then it begins to turn around on the wave 4 pullback, right? So once we're solidly in the wave 4 pullback, we can remove this. If we want to know how far wave 4 pullback is going to be, we simply go to the Fibonacci redraw and we draw this. Now, I will tell you, if you want to know how I get my target zones, it's actually pretty easy. I fib both positions. Now, how they overlap is where they're going to go. So, this is my green zone, this is my yellow zone, and this is my red zone, right? They overlap. You can actually, that's how I get the zones in the stoplight. So I retrace 2 different places. It works really efficiently. That gives you a very good estimation of the pullback, whether it's going to ride that whole play or just that one. So we get our wave 4 pullback that comes down to, we'll say it comes down somewhere into the green zone, maybe just hits a yellow line, that's fine. Now we can remove these drawings. Well, it wants to know which one I want to move. Remove those drawings. Now we have our beautiful wave 1, 2, 3, 4. So we want to know how far that's going to go. We go back to our Fibonacci redraw. We come back here and we go to the top of wave 3. Oh, I'm sorry, wrong stop. Now we're going to go to the Fibonacci extensions because we need to come up with our wave 5 target. So we come down here to Fibonacci Extensions. We are going to make this swing. And that 61.8 line, and if you're wondering how I get the other part of my target, I actually just do this again from the wave 2 low. Now I have a new target zone right there. That is the target zone as it's drawn out on my software. That's how the software works. Now you understand fully how to draw it without having the software. It does, however, take time. The software makes it extremely fast. I just showed you exactly what that software does. So I hope this video has been a help. I hope it helps people understand more how the Elliott wave will help you be a more accurate trader, and it will help you predict what's coming. Now, like everything else, there's no rhyme or reason if your stock market, the stock market takes turns for bad news, terrorist attacks. Uh, the CEO of whatever company you're talking about gets caught doing something that he shouldn't do. For whatever reason, it is completely possible that anything can fall apart at any given time. But as you can see, if you go back, and if we go back on any stock here, I'll just pick one. Let's look at AMC. Everybody likes AMC. If you look at AMC, we can see, again, this is the 1 minute chart. Let's find some Elliott waves. Here was an Elliott wave that played out on a downturn. So let's just fib, and I know there's a lot of markings on here. That sucks kind of. But let's just play out the Elliott wave on this downturn so you can see how accurate it really is. So if we have, the first thing we would want to do is we're trying to figure out where wave 3 was going to run. Here's where wave 3 ended, right? So the first thing we are going to do is the start of our wave 1, right? Wave 2 pullback, or wave 1 top and wave 2 pullback. That gave us a target for our wave 3 down of 161.8. It surpassed that. It at least got there, and it surpassed it. So we got the whole way down there. So anything going further is fantastic, right? So the next thing we wanted to see was where was our wave 4 pullback going to be. For that, we go to our Fibonacci retracements tool. We go back up here to the start of wave 1, and we come down here to this wave 3. And as you can see, there's our target zones. Pulled back into the target zones just perfectly. And if you wanted to see where wave 5 was going to go, you can go ahead and do the retrace. We go up here to wave C, down here to wave 3, and back here to wave 4. And you can see there was our 61.8%. And if you were playing this short, it did better. Now, talking about afterwards, look what happened afterwards. We came down, we found that level of resistance. We come back down, we tested that level of resistance, and that was the signal of a reversal. These plots play out over and over and over and over again. They are the best unkept secret in stock trading. You can, draw channels and trend lines and flags and balls and do all that stuff all you want. Elliott wave is the most predictable form of stock trading. I appreciate you guys watching. I hope this really helps somebody, and I hope you make $1 million today.